Hey friends, Michael here. I want to introduce you to Nathan here. He's at Lux Mortgage and he's the broker for the mortgage loan process. Nathan, can you tell me exactly how you guys do the 12-day process?
The 12-day clear to close process, yeah. So most lenders out there are going to be doing an average 30-day clear to close. And a big part of understanding the closing process is understanding the mortgage loan process. And we can get probably a copy of this PDF added to the video or a link to it in the comments or something. But essentially how that works is when you go to get pre-qualified for a home loan is you fill out a mortgage loan application and your lender will review your income, your assets, and your credit. Now a really important thing here is when you fill out your income or your application, it's all stated information, which just essentially means I'm going to tell you I make this much money. I'm going to tell you I have this much set aside. And what the lender needs to do for the actual pre-approval, instead of just a pre-qual, is they need to get all that backed up in writing. So Mike, if you're going to tell me you make $1 million a year and you got $200K in the bank right now, that's cool. I can give you a pre-qualification based on that, saying, well, you can qualify for essentially whatever you want at that point, right?
Right.
But if you turn me in pay stubs that show you make $3,000 a month, or you send a bank statement that has a $20 balance in it, I can't actually qualify you for what I said I could. So a big part there is getting the documentation in writing so you can verify everything that's been submitted into the application. Now, a lot of lenders, unfortunately, will wait until you go under contract to request those documents or to even review them. And so, you may be around shopping for houses that you really can't qualify for, and you put in offers, you get accepted on something, only to find out the loan is actually going to fall through. So, not only for the clear to close process, but the actual client satisfaction, retention, and shopping for things that actually fit for you, we get all those documents in up front. Now, once you go under contract is when our timeline starts. So knowing that we have everything already ready to go is fantastic. Whenever you guys go under contract, we can immediately submit everything we have over to underwriting. And they're going to request for updated copies. So if your bank statements are more than 2 months old or your pay stubs are more than 90 days out, we're going to need updated copies to make them closer to your closing date, verify nothing's changed in your financial situation in the past few months. And the relationship with underwriting is typically, ideally, a 3-stage process if everything goes smooth. We have your initial submission, which is where we turn in all of the documents that we got on your initial pre-approval. They're going to review everything, and then they're going to kick back, pay stubs are too old, we need new copies, or this bank statement has a large deposit in it, we need to source that and explain where that large deposit came from. And then our second submission is clearing all of the remaining borrower conditions, all the stuff you as a client are responsible for explaining about your file. So initial submission, here's what we have, underwriter reviews, kicks back, here's what we need to explain everything. Second submission is here's all the explanations, and that should be the end of it for you as the client. The third submission is typically waiting on the third-party services like your appraisal to be completed, your title work to be done, and you to have a finalized homeowner's insurance policy. And if everything goes well, ideally, those 3 touches from the underwriter are the only things we have to worry about, and then you get your final approval. Now, unfortunately, what happens for a lot of people is they get that initial submission done, but it happens like 4 or 5 days, if not longer, after you go under contract, because they're waiting until that time to request those documents. So you guys go under contract on your home on Monday, you have an accepted offer, and then the lender tells you, I need pay stubs, bank statements, I need all this other stuff. And then it might take you a couple of days to put it all together, grab it from work, grab it from your CPA or whatever you have to do. And then you're 3-4 days into the process getting documents turned in. And then underwriter reviews it, takes them a couple of days. Now we're pushing past the weekend, which adds 2 wasted days to our file, because underwriting doesn't work on weekends typically. And then it's Monday or Tuesday until you get word back of these are your second round of documents. And then it's a delayed process. Next up would be the appraisal is always a big one. We try to get our appraisal ordered as soon as we get disclosures out to you, within 24 to 48 hours if you go in under contract. Now we delay the actual inspection date of it because we want to give you time to have your regular inspections done. And so you can check through and say, well, if there's a major issue with the property and I know that if I can't negotiate with the seller on this, I'm not going to move forward anyways. Well, we don't want you paying for an appraisal, having that done for a house you're not going to move forward with. So we order it, we have you pay for it up front, but we delay the actual inspection so you can get all your due diligence done. And then if you decide you want to move forward, we've already got the appraisal scheduled and ready to go. And if you decide you don't, we can cancel it before it happens and you get your money back. Whereas some other lenders may wait until after your inspections are completed, you might be a week into the process at this point, and then they'll order it on day 7 instead of day 2. And now it takes them another week or 2 to get that scheduled, and then to actually get out there and complete it and return it back to you. And you might be 21 days in before that report ever comes back, allowing you to do your final submission. And we're already clear to close on day 12. And that all comes from being very diligent, very efficient in your process, and making sure you get the steps taken care of ahead of time, and you're always thinking about the next move. Outside of that, a lot of delayed closings, a lot of extended issues are because of lack of preparation and lack of reviewing the documents that are turned in, lack of knowing what's going to be required before you send it in. Because Mike, if you give me a bank statement that has a $5,000 large deposit in there, before I even turn it in, I'm going to know we need to explain and figure out where that came from. So whenever I turn that bank statement in, I'm turning the explanation letter in with it as well, and that immediately clears us from having a repeat issue, saving us another trip back to the underwriter. All those things added together, knowing your business, knowing what's expected of you and your clients and the underwriting guidelines, allows us to have a really streamlined, clear to close process. When we started Lux Mortgage, we had a goal of speeding up your pipeline and hitting an average 18.5 days clear to close. And within, I want to say 60 to 90 days, 2 to 3 months of being in this business and working this process, we've consistently been able to hit a 12-day clear to close, allowing people to get into their homes faster and saving so much headache and hassle with the home buying process.
Well, thanks, Nathan. That was awesome, man. If you guys have any questions, let me know or let Nathan know. I'll put his information on the comments below.